Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, and we are now on the 17th of November, about 6:35 in the evening. Apologize for not being able to put out a morning flash update, but there was so much in the way of trade going on. I was writing to my subscribers different trades, putting on things, taking things off for them. It was a great day. It's that simple. I wish I had more of them like today. But in any case, as you look at how the markets are doing, we got a bit of a sea of red happening right now. The reality is the market is looking at COVID spreading through the country. 3 senators now this week have gotten COVID-19. Mr. Grassley, we're wishing him the best, 87-year-old. Longest term, I think, senator right now. And it's the first vote that he missed today in something like 20 some odd years. Wow. COVID will do that. In the energy markets, we saw a build of about 4 million barrels in the API crude oil part. Now, overall, between the products and all, it's pretty much a wash, but the market didn't like that. OPEC is meeting. I'm expecting that they're going to agree to not increase oil at this point in time at their January date that they were talking about, and they'll push it back and they'll adjust to whatever the market offers. That's going to be the smart move. In the currency markets, we got up nice and high, but maybe they're a little too high at this point in time. So as we take a look at a weekly area chart of closes on the S&P, you can see the market sitting here at 3,600, up 18 points, but it is. If the market ended right now for the week, it's a new all-time high close. Congratulations. Again, that inverted head and shoulder, this pullback here, I didn't want to see it really take out these numbers, and that was the part that normally doesn't occur. It comes down, does a test, and goes up, but it still overall worked. My original target when I put this up weeks ago, back over here, it would have been in October, was 3640. The videos are still out there. You'll see what I'm doing, and not a bad call. By the way, it wasn't telling you to go long or short. It was just the count from an inverted head and shoulder. Now let's go back to what I do on a regular basis with you. By the way, the smartest thing I think the traders can do, I get asked this a lot, the charting course. It's a trading discipline. You build on it. You incorporate your other things. You don't have to just listen to what I teach. You bring things into it. And I teach it in such a way that I take the name off the chart, because I frankly don't care if it's a stock market. I don't care if it's real estate. I don't care if it's the futures. If you can chart it, the concept works. It works in the sense of the discipline. Do we understand that? That is what I define as works. So right now, the swing line, which I developed, it helps me to determine on rallies and breaks where a low or a high is, an apex. And because I do it this way instead of me drawing it, it's always consistent. The worst thing you can do is draw your own lines. Try drawing chart lines. They're going to be this way today. They're going to be that way tomorrow. Yeah. When I look at the market, I see a higher lows, higher highs. That is a bullish signal. That is the definition of an uptrend. The risk associated with the market is not to get under that low right there. When I add moving averages as a filter, my concept is I look at the 18-day moving average of closes and I say this about it. If the market is over that number, I have an upside bias. If the swing line is up and the market has an upside bias, that is still a go signal. That number's over the 100-day average of closes, which is over the 200. The averages are all lined up bullish. Where's the resistance point? It's the upper Bollinger Band often. There's others. I use window envelopes in my morning subscriber videos, and they are really neat because sometimes you don't hit the Bollinger Band, but you'll hit that window envelope. I saw Rick Santella using them about 2 weeks ago. He understood the difference there too, because you need other vehicles that maybe the market gets overbought or oversold as it approaches a price like this one is doing, and maybe you're better off in that area with another piece of information there. That's what I do. So the trend is up, the market is overbought, it is not embedded, and it might need to decide right now what to do with this. Now, both numbers tonight of the slow stochastic are over 80, but this is Wednesday's trade. We don't know where the market's going to finish. So I remove that off the chart. When I go to Tuesday, I don't have both numbers over 80 or the day before. Therefore, I know I'm just in an overbought territory. Overbought in an uptrend, I'd be a bit cautious. Overbought often doesn't attract new money. In the NASDAQ, the trend is up. Higher lows, higher highs. What would break the trend is getting under 118.0175. That could set up a challenge of where the 18-day average is. Momentum is not giving you any indication prices should go up or down, but the trend is still up. Dow, little different pattern. So let's get rid of tonight again. Tuesday, both numbers were over 80. This is what I'm focused on when I see that pattern on the slow stochastic. They were that way on Monday. 3 days in a row over 80 is an indication the market has switched from overbought to embedded. Now, the degree of embedded depends on the third day where the market closes in that day's range. It's another thing I don't teach here. It's in my charting course. But I look at that. Friday, you didn't have it. So today, Wednesday's trade, even though this is Tuesday, we're in Wednesday's trade, will determine if we're embedded. If it is, then I think the traders get very aggressive on the breaks in this market, buying it until that red line closes under 80, targeting again wherever that Bollinger Band might be. In the Russell, you don't have that pattern. You're just overbought, and you have a lower low, higher high. I don't see a trend, but I certainly see a market that's come up, and the question is it going to be successful in taking out that high and doing then something else with the slow stochastic? We'll see. In the VIX, the market has been a strange market. You keep coming down here, fully embedded. Fully embedded means I'm looking for lower prices until that red line's back over 20. So what does that mean? I interpret that to mean that even on the pullbacks in the stock indices as a whole, this index, the fear index, is saying investors are waiting to buy the breaks. They're not nervous about the market. I keep seeing traders on the different TV stations taking out the insurance, which is basically they're buying the VIX to cover their stock market. They're hoping it goes up. This is arguing against them at this point in time. The T-bond market changed its colors today. The market now has, with today's action, higher lows, higher highs. It went bullish. In order to negate the current uptrend, you've got to take out 171.9. Should the market continue, a possible objective is all the way here. Could be the psychology of COVID stepping back into the market. Could be what Fed Chair Powell said today on a virtual interview, if you got to see it. And he is extremely concerned about what's going on with the COVID. He is very concerned that the government hasn't come to the table with fiscal policies. Miss Pelosi today reached out to Mitch McConnell and said we should get together. Well, getting together is a nice overture. She wants $2.5 trillion of relief for COVID, and Mitch is offering $500 billion. They are a world apart. I don't know what that's going to get done or not get done. We'll have to wait and see. In the 10-year notes, we have a pattern of higher lows, higher highs. Again, that's a bullish pattern. So will the trade support the market at 138.9 with stops under 137.27 becomes the question. Momentum is up, trend up. If the market gets a rally under its belt, big resistance at the 100-day average in green and the upper Bollinger Band. But at least we're out of this downtrend. That part of the market has come to an end. Frankly, it came to an end when this was taken out here and when you took this out, and I said that in my written reports for my subscribers. In the dollar index, you're now oversold. I'd be very, very cautious on pushing the dollar right here. Doesn't mean it's not in a downtrend. It is. You've got the lower highs, the lower lows in place. You have an objective in this 91.96 area, but the market just isn't following through in a strong way. Eurocurrency, higher lows, higher highs, could end up with a pause here as this market's the flip-flop and it's overbought as can be. So are they going to be able to add to this, or are these markets ahead of themselves becomes the question. A market that has just been on a tear to the upside has been the Japanese yen. It ended its downtrend right here. You had lower highs and a lower low. Once you got over that high, you stalled at the 18-day average of closes. But the trend ended. And if you take my charting course, you learn that. And now the question is, what is it doing? And it hasn't put it in an uptrend. It's just continuing to take out the shorts, in my opinion, in the market. In the Bitcoin, I was laughing today as I was reading comments by Ray Dalio, and if you don't know who he is, look him up. He's somebody to know and a very, very impressive money trader. Very impressive, one of the best there is. And he was saying, I just don't get the Bitcoin, and he makes note as the market just keeps rallying. I understand it. I think I get it, because you got to get away from the idea that it has any use other than speculation and any value other than those who trade this. It's that simple. What is the margin on a contract? You know, it's near $30,000. And our firm doubles the margins because we don't trust the liquidity in this market. And there's plenty of reasons to say that. Now, it has been behaving pretty well like a much more mature market, I have to say that. And with ranges of this size that it does, for that kind of margin, it seems appropriate. But it's been an embedded reading, it's holding up, and it's doing just what it should with that type of reading, according to my chart analysis. Then we get to the Brent WTI, and again, I forgot to change this. This is December. I got so much on my mind. I'm going to do it before I walk out tonight of my studio. Let's go to Jan Brent. Lower highs, higher lows. You're in a pause. What number are you pausing at? Do you see the green line? That's your 100-day average. So on the way up, it should act as some resistance, and it certainly did. If we come here, you can see it knock down the door. Here it knocked down the door. Well, if it gets over that number, then on the way down, in theory at least, what was resistance should offer some support. And the market, you tell me what it's doing. There's your battleground. So between this number and the upper Bollinger Band is the resistance point. The trend of the market, as I said, it paused because you have higher highs but a lower low. If you can clear 44.68, the trend resumes to the upside, looking for up here. And if this market breaks under this low, the odds favor you're going back down here. What about slow stochastics? Both numbers are over 80 tonight, but you can't count today. We don't know where Wednesday's going to finish. Tuesday they weren't, and the day before. You're just overbought in the market. WTI, it's the same pattern. I'm not going to go through it the same way. Lower highs, higher lows, exact same fighting zone. Heating oil, exact same zone. Lower highs, higher lows, same identical thing and overbought. Nat gas, we're going back into the 60s later, as early as tomorrow. Thursday and Friday, I understand that's where we're at. 60s for Chicago. November 20th? Wow. I mean, this is insane. And this is happening in a large swath of the country. So the wintertime weather comes. We certainly got into the freezing in Chicago, but then it's shooting back up, and that changes the big demand for the nat gas. Chicago's not the market, but it's the whole area. So if you go beyond Colorado and you start heading east, you see this, and especially if you drop away from Minneapolis, Wisconsin, and come down to the center of the country across very mild temperatures, that's impacting the market, and that's what you're seeing going on here. The build, small, but building at a time of normal draw. One of the things I looked at today, and I was so busy using them, were pivot points. The markets were at key numbers. I am not an in and out trader, so I am more of a swing trader. For the weekends, I'm a position trader. What do I mean? I look at the weekly charts. I could care less about a pivot point there. But for the day trader that's a swing trader, no. These are important numbers because sometimes you get up to an area where you have a profit zone for yourself. Let's just call it a profit zone, way up there. And the market's struggling. Well, what's wrong with looking at the pivot points to see, is there a reason it's struggling? What's the slow stochastic doing? Now, there's different time zones you use with these. The traditional way is a 15-minute bar chart. And on a 15-minute chart, you're looking for the pivot, sell zones above, buy zones below. There's generally two, and there is one there, if you can see that. And I add to it my slow stochastics with all the same ideas that I have. You do get embedded readings. You do lose those readings. It calls for pullbacks to certain numbers. I tie it together, and I use it during the day to hone. That's the right word. Numbers that I put out for my subscribers where they should be buying or selling in the marketplace, and I tell them what I'm looking for. And that's how I use this particular study. Do I think it's important? I think it's super important. Have I used it a long time? I'm going to say I learned about it, I'm going to guess 30 years ago. So this gives you an idea, and I learned it from the gentleman that I think took it to the right level and developed it where it's commonly used. I'm not going to give his name at this point. How do you find out and get our 3-point video series? And yeah, it's free. Call my staff, they'll help you. Go to our website, under the free offers, you'll see this there. I'm Ira Epstein. Long day for me. I'm not tired, I'm wired because it was such a good day. I will talk to you all tomorrow.